Well, good morning, everybody. Welcome, traders. It's the 26th of September. Welcome to another webinar. Hope everybody's doing well. A couple of things. First of all, this is YouTube Live, and what that means is typically there is a 10 to 15 second delay in you typing in a question and me answering the response. And what we're going to do is we're going to look over my portfolio. We're going to look for trading opportunities that meet the rules outlined in the educational material at forexeducation.co.uk. I am in a couple of trades this morning, guys. I'll come to the Forex Factory calendar in a moment, but those of you that are registered for the signals, then we've come very close here to hitting for 38 pips on this pound yen trade. I'm in one other trade as well. Not too sure how that is doing. Let's just take a quick peek at it so that you guys are fully aware. We've just gone into profit on this flag pattern on the Aussie dollar. So I'm in two trades this morning. But before we get into the trades, good morning to everybody. Let's go and take a look at that Forex Factory calendar, the all-important news, which tells us if there's going to be any high impact news today, and if there is, maybe we want to be a little bit cautious about entering trades, particularly on the lower time frame. Excuse me, I'm still suffering a little bit with this cold, which has turned into a bit of a cough, guys. So Thursday, news out today. Let's have a look. An employment change. Okay, we do have some ECB news. We've got Draghi speaking at 2:30 for the euro. Watch out, we could see some movement there. Some pound news at 2:45, where we've got Carney speaking. There is an FOMC member speaking this evening at 4:45. Not really something I would pay attention to. So very, very small amount of news out today. Just be cautious if you're entering trades 15 minutes before those people speak. Other than that, pretty clear news day. Just to touch on the news a little bit, just bear in mind that once again the pound is unpredictable. Obviously, we've just had the Prime Minister who has ruled to be unlawful that he closed Parliament down, and he is being questioned at the moment, and he's being asked to hand in his notice, giving us more instability at the moment for the pound. And of course, then we look at the dollar, where we have Trump, who is potentially once again being removed from office for, well, I think it's perjury, was it? Something like that. I give up. I can't follow the number of things that happen in the two countries all at once. To be honest, I'm a little bit sick of it all. So we want to be a little bit cautious, because you never know when an unspecified news event will come out, like something to do with Trump or the Prime Minister or Brexit. So just a little bit of cautious. Obviously, we've been very cautious for the past few months, and I just don't think anything has changed. We just don't know what news could come out and when. So a little bit of cautious pretty much on all the currency pairs out there. So good morning to everybody. We've got a few more people in the room now. So let's go and take a look at the trades. As mentioned, I am in two. Looks as though we'll be able to catch this baby hitting. Was a little bit late to this morning, to be honest with you. When could I have got a better entry here? 7 this morning. Yeah, I could have got a far better entry at 7 this morning. We'll just give this a couple of minutes. I'm just going to cough 1 second, guys. Damn. Not been ill for 5 years. 1 week in England. Oh, terrible. And to make it worse, I haven't really been sleeping the last couple of weeks, and I left my glasses at home, so really struggling to read the text. Can't says US gap in Q2. Impeachment. Yep. Impeachment. We're pushing that 127 now, guys. It hasn't taken. I'm just going to manually take that, because we did push down and hit that 127. Didn't quite front run it enough, so banked 35 pips on that trade, guys. On the pound yen. Oh dear. Oh dear. Okay. Calm my speech down a little bit. Maybe the coughing will stop. 35 pips to start off the day. Not bad at all. We'll run through this trade in a moment. Let me bring over the Aussie dollar. Those of you that are not involved in it, we've got a lovely looking flag on the Aussie dollar. Pretty good reward to risk on that trade as well. And again, we'll run through that shortly, but I'll start off with the other currency pairs. Just to say what Karen said, potential impeachment for about the 4th time for the president. So you just never know, for me, if there's going to be some piece of validity, some confirmation, a recording, a video, a transcript that's been leaked that was from the president's own computer. You just never know what's going to happen. I mean, if you think about this impeachment for the Prime Minister, this was a private conversation between him and another Prime Minister. I forget, was it Israeli or it was some foreign country. And that transcript from the president's own office was leaked somehow. And so it's very conceivable that other documentation or other proof can be leaked. And it could be something next time more damaging, more damning. And that would just send the market spiraling, just like Brexit does. So just be a little bit cautious. Cautious times. I know that Marcus won't trade any pound pairs. Are you trading any yet, Marcus, or are you just out until Brexit is over? You might be out until the 31st of October if you're doing that, which isn't a bad idea. Stuart, good morning. Good morning. Mikko says you have this as pound dollar on the latest trades. Did I send it out as the pound dollar? Damn. Really? Let me have a look. God, I do. Yeah, I do. Pound dollar. Rushing this morning. Let me go back and change that. Trades, pound dollar. It should be pound yen. Hopefully you guys spotted my mistake. When you looked at the chart, you should have noticed that on the screenshot itself said pound yen instead of pound dollar, but obviously the email said pound yen. So apologies guys if there was any confusion there. Human error. It cannot be it can't do anything about human error. It's just down to me. Great big human error. That's what I am. Khan getting favour from Ukraine, Prime Minister Ukraine. That was it. To get favour against another presidential candidate. Yeah, it was to do with his son, wasn't it? It's to do in the next elections. He's trying to win the next election basically by digging up dirt. And to be honest, does it happen in every country all over the world? Very likely. It's just that this was leaked. And the question I suppose that I ask is, if it was any other prime president other than Trump, would it have been leaked? Because there's so much controversy with him that, you know, there are people that really want him out of office and are obviously doing things they shouldn't, like leaking sensitive information. So you got to laugh. Hell, the whole world is laughing at the UK. Can you believe that our own Prime Minister has been ruled to have broken the law and lied to the Queen? And so instead of getting on with Brexit, we're now looking at getting our own Prime Minister out of office. And all this is spiralling simply because of Brexit. My personal view is we voted to leave, we should leave. There should be no additional vote. Otherwise, you just end up voting 2, 3, 4, 5 times until they get the decision that they want, which is to stay. But the actual main vote that was done, in my opinion, should stand. That's what the people voted for. That's what we should do. I think it's a joke. Hey, who said politics wasn't funny? Mikko, with you on that one. I'd say they should make me Prime Minister, but I would be terrible. I'd be absolutely terrible. You got to be diplomatic to be a Prime Minister, and sometimes I'm not very tactful. So let's crack on with some trading, guys. We've got a few more people in the room now. So any trades out there you'd like me to take a look at? What we'll do first of all is butt kiss on the dollar yen. So, well, actually, we'll do a review on this. We'll take a look at the dollar yen. If there's anything out there that you guys want me to take a look at, let me know. But structure level on. Repetition here, guys. We end up doing the same thing time and time again. It is the best way to learn, by doing and repeating the same thing. This is our lowest structure level just here. We came down to this area once and tapped it and then we rallied off up. So if we draw out the trend, which I love to do on every chart, move lower, pull back, move lower, pull back, move lower, pull back, move lower, pull back, move lower. We did just make a new low, and then boom, we violated this level of structure, and we're kind of up in this area, though not quite to the highs. Now I would have expected that we would reach this higher level, just based on my personal interpretation of the market, but I have no confirmation of that. So but what we typically do is, when we're close to a structure level, we do tend to go and hit the closes of the candles. A prime example of that, guys, this level right here, you can see did not come down to test the lowest point. Now I know that this is a wick, but typically we do come down to test on wicks the lowest level when it's a big wick like this. And what we did is eventually we came down to test it. It's the same thing up here. We've rallied very close to this level of structure, and my personal opinion is that because we've come so close, we do typically at some point go on to test it, even though I've got no confirmation of that here. Let's just zoom in and get a little bit of perspective then. So we had a bullish day yesterday, but that was not a higher high, higher close. We have not got any RSI confirmation. There's not going to be any kind of fib confluence here. There's no real psychological numbers at this level. So just based on the dailies, other than my personal view that we've come close to structure and hasn't hit, I have no real direction on the dollar yen. So we start our higher time frame analysis. We go from the dailies down to the 240, and the more time frames we drop down, the less powerful our higher time frame confirmation becomes. So for me, the highest confirmation is the daily, then the 240, then the 60. The problem is this: we're using the 60 as our higher time frame and entering in on the 15. It really isn't a stronger signal as, say, a nice big higher high, higher close on the daily with a directional move, and we're moving and there's room to go higher. So we do lose that additional confirmation. So on the 240, move lower, pull back, move lower, pull back, move lower, pull back. With this move lower here, we did violate this internal but quite significant level of structure. Move lower, and then we're seeing a pullback, guys. So if this was the last outside return, and what we do is we make this very easy for ourselves, we highlight from the top of the outside return to the bottom, and we say, has structure here been held? And the answer is yes, structure has been held. We have no violation. So we have got many multiple swings here where we're in trend, and if we move this outside return up to just the wicks, then that means we're actually within the last chance area. And the last chance area is where we look for two things. We look for a double top, we look for a head and shoulders for an entry and a reason to get short. Now again, I've got no confirmation on the dailies as to which way this is going to go, so when I'm on the 240, I want to be extra cautious about getting my entry. Sorry guys, I'm getting text messages through on my phone. Still working from the UK. Did have a flight yesterday to go back home, which I missed because I had 2 more appointments for houses, and then my appointment was at 11:30 this morning, and he emailed me from Purple Bricks to say I had a car crash yesterday, can't do the viewing now until the 6th of October. My response was, I told you I would miss my flight for this appointment. It cost me £200. And that was my response to him. I did also say, is there anyone else that can do it? But that ain't going to get me very far. So here on the 240, we are within the last chance area. So as per the rules, we are allowed to drop 1 time frame lower. and look for that double top. So first of all, structure has been held here. So what have we got, guys? What have we got? I just want to look at a couple of things first of all. I don't think this is going to reach. Well, we have a harmonic move. It's a little bit short. No, it's an AB equals CD pattern. It's a little bit short, guys. If I'm honest, I wouldn't take it into account. Do we have a bat pattern here? Don't know if the C leg hits a 382. Yeah, it does. Okay, guys. What are we on the dollar yen? So X to A to B, B to C, CD completion up at the 886. Now we have rallied a little higher, but structure has been held. And for this pattern, we may have already hit the 382 target. No, we've not. Okay, so we do have a valid bat pattern here. We've got the 240 and the 60-minute holding structure. We could see a double top here, so move higher, pull back, move higher. This would give us a retest or a double top within this area. Do we have the RSI confirmation? So the RSI confirmation is we need to be overbought on the first test with divergence. It's likely we will get the divergence. We have it now, but we could see a double top there. So not only are we in trend, guys, but we have a valid bat pattern. We failed to hit the targets down at the 382. We came 5 pips away, so that's not close enough for me. And we could come up here and see a double top as well. And you've got a bit of a decision to make here. Let me get that arrow right. Is it F10? No, F11. There we go. So we're in trend. We have violated this level of structure. The next level of structure that stands out to me, guys, is this one. And why does it stand out to me? Because 1, 2, 3, 4, 5, 6, 7, 8, 9 levels of structure there, guys. Okay, just give me a yes if you agree that this is a major level of structure. And with it being a major level of structure, do you agree that that would be an appropriate place to take targets? Just give me a yes if you agree. Absolutely. You got a structure level that's been tested 9 times. And importantly, it's recent. It's not historic, it's recent. And the more recent structure is, the higher the probability we're going to see a reaction. And since we've seen 9 reactions in the past very, very recently, it's highly probable we could see a bounce at that area or a reversal, or we could see something. It's unlikely that we're just going to go and good grief, come on, F6. It's unlikely that we're just going to do this. Yeah, we could hit this, we could rally back up to here. We may eventually break through it, I have no idea, but this would be the area I would want to take targets at. So we're in trend. We've got 240 confirmation, 60-minute trend. We've got a back pattern that hasn't hit targets, and we have a potential double top. So if we can get involved with this trade, you want stops, stops above the first test by an ATR. ATR is 8. So that's going to give me 97. It's going to get me just before that 108 even number, unfortunately. If you want, you can get stops behind it, giving you a little bit more risk, probably an extra 8, 9, 10 pips of risk. But if we look here, look at how far the stop would be in relation to the structure level. It would get us behind that 108 psychological number, but this is a little bit too far, if I'm honest with you. So I think we're going to have it just underneath that psychological number. Now you can either then just take standard targets, playing the 382, or you can hold for the bigger move all the way down to this level. Daily long term is bearish trend. Yep. And again, let's just go back to the 240 here, guys. So 240 here, you can see we are trending lower. Importantly, we have violated this level of structure, and yeah, there is a high probability of coming down to this level. Now, could you get involved right now? Yes, you could. You would have a worse reward to risk, but nevertheless, trend, back pattern, your reward to risk would be something like this. Or you can wait for the double top and give yourself a better reward to risk. However you want to work, it is entirely up to you. Depending how you like to trade, if you're more aggressive, take the trade now. If you're not, you're more conservative, you wait for the double top, you wait for the better reward to risk. You wait for a 26.18, be more cautious and wait for more confirmation. There are so many ways to trade, and how aggressive you are is it's up to you. It's what your back testing results tell you. So, sorry guys, I'm just gonna put you on pause a second while I blow my nose because of this cold. Okay, so I'm going to set an alert, wait for this double top to come up for me personally. Just like that. I'm well on my way to getting myself out of this drawdown. Had a few big winners recently. Took a few losses as well, unfortunately, on the breakout patterns, but still doing quite well. Any questions on the dollar yen, guys? Lots and lots of confirmation on that. Pound dollar. Let me just check on my trade. Okay. Pound dollar. I did post this into the chat, so if you was in there, we have two advanced patterns. We have an at market cipher. We have a back pattern. We have an AB equals CD pattern. So three patterns in one, basically, all completing in roughly the same area. Let's go ahead and do the higher time frame analysis on this trade. So first of all, we did double bottom down here, guys, or retest. So this is a daily rotation. Sorry, when I say rotation, we've seen a upward move in trend. If we draw out the trend, move lower, pull back, move lower, pull back, move lower, pull back, move lower, pull back, move lower, the double bottom, and then we moved higher. So very simple. Now that we can see it, we can easily highlight the outside return, and we can clearly see that we did not violate, okay? Just here, okay, this did not violate the outside return. So since we have not violated the outside return, there is no confirmation that we can go higher. In fact, yesterday, guys, we had a beautiful big lower low, lower close candle, okay? Could see a rotation. The problem is, where are your projected targets? Because we have a great big daily double bottom here, and I can't use trend continuation when we have a rotation pattern the other way. So this double bottom here stops me playing for trend continuation. Now when we do drop down the time frames, if we're in trend and it offers me a trend continuation opportunity on the lower time frame with a smaller amount of risk, I will enter it, and I'll maybe then look at being conservative with the targets, or I'll move my stop on every outside return and see how low we can actually get before we stopped out. We'll talk about that a little bit more as we go through the charts. Khan says it's on up rally since broken out of daily bearish channel. Yep. But we have not violated the outside return. So even though we had that bullish move, we have no confirmation the market can go higher, because this was the outside return, and until we violate that, we have no confirmation we can go higher. So I'm a structure-based trader. I'm not fundamental, so I do not go off the news. The chart tells me right here, sellers were at this level, we failed to close above it, followed by a big lower low, lower close, an indication we are going to see, at least for the short term, some bearish movement. Car says, please draw the bearish channel as well on the daily. Another way to look at it, how nicely we broke it. Okay, the channel. Are you talking about this? I think this is what you're talking about here. So we had this. Just give me a yes, Karen, if this is what you're talking about here. Okay, so this is what Karen's talking about. So this is now a different view of the market. So let's take a look at this. So we've got two levels of structure. We have our outside return, which was here, which has clearly not been violated, and so has not told us in any way that the market can go higher. However, now we have trendline structure, which was tested once, twice, 3 times, and we've physically broken above that trend line structure. So we've got conflicting signals here. On one respect, we have normal, what I would call normal structure, a horizontal structure level which has not been broken, so there's no violation of trend. However, we do have a trendline structure which has been broken. Sorry guys, 1 second. Apologies guys, my kids tell me off for sneezing so loudly. Apparently I embarrass them when we're out walking and I sneeze like that. So, Cairns long. Now, we could see then a bullish or a bearish move here. Now, if you do not take trendline structure into account, then you're going to ignore this. And you're going to be looking bearish because we held the outside return, big lower low, lower close yesterday, and we could see some bearish movement here. At the same time, what we could see is say, the market may come down to this daily bottom, or at least this trend line like this. We could see a hold, and then we could see a return the other way. What we could also see with this double bottom is if we throw a fib on from our swing low to our swing high, we could see a 26.18 trade. So we could see the market come to the 61.8. Okay, and then we could see a move above, which would then violate the outside return. Now, if we did this, not only have we violated this trend line, but we also violated the outside return, and that would give me the confirmation we need that we could see a bullish move here. But right now, conflicting signals. The only bias I have is that I think that we're going to see some bearish movement, at least for the short term. I've got no confirmation that we can break past this double bottom, and I've got no confirmation we've broken above the outside return either, guys. Really struggling with this cold. So let's drop down the time frames. For me personally, conflicting signals like this, I'm not really interested in any big moves. No big bullish moves, no big bearish moves. But for me personally, I would look for some small bearish moves based on us holding structure and the big lower low, lower close candle yesterday. Now, Cody and someone else, it may have been Vinco, I'm not too sure, we're looking at this being a head and shoulders. For me personally, this is not a head and shoulders. This is just a rotation in trend, and I'm going to draw it out. So we had a move higher, a pullback, a move higher. This actually ended up being a breakout pattern. Do you remember we spoke about this? Couldn't get involved, but it rallied and hit targets. Then we moved higher. Then we saw a pullback. then we saw a retracement. So let me just clean this up a little bit. And now we're seeing a move lower. Now we've seen a retracement and another move lower. So the head and shoulders looks like this. For me, this isn't a head and shoulders. This is like we've got two left shoulders here. That's the problem. This for me, I would just call a rotation in trend. This is just price action reaching a level of structure it couldn't violate. Then what we did is we saw a move lower, a pullback, and a move lower, a pullback, and a move lower. So we're in trend bearishly here, guys. So there's no reason to look for any bullish opportunities right now. The closest structure level we have is this one, guys. Okay, this is the closest structure level. And we have just, as I say, we're in trend, and we've just now closed at the 10 o'clock candle a big bearish red candle. So for me, there's a high probability we're going to come lower and test this lower level of structure. So if this is a head and shoulders for you, that's fine. It's what you deem to be a head and shoulders. For me personally, this is just a rotation in trend. So looking bearish, bearish, bearish here, guys, at least for the short term. Let's drop down to the 60 because this will offer us an opportunity throughout the course of the day. Where do you think we're going to be looking for, or what type of opportunity do you think I'm now going to be looking for? So we're in trend, move lower, pull back, move lower, pull back, move lower. Tell me what I'm going to be waiting for now, guys. Throw it in the chat for me, will you? Got literally a full box of tissues here. Nope, not double top. We're in trend. We've just put in a new structure low. We can clearly see there is room for the market to come down to at least this level of structure. What type of opportunity am I now going to be waiting for? This level here is physically broken and closed below this level. So I'm going to be waiting for price action to do what in order for me to get involved? Okay, I'm going to be waiting for the market to retrace. Simple pullback trade. So this is the outside return here, guys. This is the outside return. I'm going to be waiting for the first, second, third chance entry. So second chance entry is the one that occurs most of the time. So we're waiting for price to pull back into this blue area. This is the outside return. We're going to be waiting for a lower low, lower close candle. And my target is going to be this structure level just here. My initial target anyway. So if we were to get a lower, lower, lower close just here, type it in for me, guys. Where would my stop loss go? Where would we put our stop loss on a simple pullback trade? Yeah, no problem, Calm. You're long, it's fine. You're long based on the trendline structure and the double bottom. For me, on the lower time frame here, I'd be looking for shorts. Lots of opportunity on the pound dollar if you're looking long. If we do break that outside return, we could see a big bullish move. Right now, I'm looking short, but there is a reason why I'm only looking to this target level as well. So stops go 1 ATR above the outside return. ATR is currently 15. That would put me there. And my target is going to be here, guys. Okay, giving me a very nice and positive reward to risk, depending where we get that lower, lower, lower close, obviously. Potentially 66 pips of pips up for grabs here. So giving us a very nice opportunity. Now, on the flip side, guys, we have X to A to B, B to C, CD completion right here for a cipher pattern. So advanced traders, you have a buy at market. Second of all, X to A to B. And I'm just going to make this a different color. B to C, CD completion a little bit further down, and guys, you have a bat pattern down here. I'm just going to throw a fib on from the X leg to the C leg, and you can see that the 886, which is the completion of the bat, is here. The 786 is the completion of the cipher pattern. So you have many opportunities here, guys. Okay, we're in trend bearishly. We've got 2 advanced patterns which you can buy almost at market. You've got the double bottom and the potential 2618 on the dailies, and we did not violate the outside return, or as Khan suggests, we violated a level of trendline structure, and you could be looking bullishly. So talk about confusing. You have so many opportunities on the pound dollar right now. Which one is correct? Which one do you think, guys? I'd love to hear your opinion, actually. Tell me which trade you think is correct. Is it the the daily 2618? Really sorry, guys, this is the last thing you want to be hearing. Is it the daily 2618, which you think is correct? Is it the cipher pattern, which is at market? Is it the bat pattern that's almost at market? Is it the 60-minute lovely looking trend continuation opportunity? Is it the long opportunity, as Khan mentioned, because we violated the trend line structure? So many opportunities. Which would you say is the right one? Marcus says both can be correct. I would prefer trend continuation. Khan says long-term bullish, might be hourly bearish. Marcus, we have different time frames. Yep, both are correct. Stay out. So lots of different opinions here, and the correct answer is that there is no right answer. That's the correct answer. Okay, if you are a cipher pattern and bat pattern trader, well, you have to take those trades right now, because you've tested bat patterns and cipher patterns, say, over a 10-year period, and if you were not to take those patterns, you would be breaking your rules, and your statistics would be different to your actual back testing results. So if you are a bat pattern or cipher pattern trader, you have to take that trade. So for you, that is the right decision to buy the market. Now, if you're not a bat pattern or cipher pattern trader, and I'm not unless I get a double bottom, I'm a trend continuation trader. So for me personally, I'm only going to be looking for a short for trend continuation. That's the correct thing for me. But the same thing applies if you are not a trend continuation trader, then you are not going to be looking for a short opportunity. So there is no right or wrong. If you're a 2618 trader and you're a trendline trader like Khan is, then you're going to be looking for bullish opportunities because you've just violated a major trendline structure. And this is what makes trading so difficult, is that we have all these different strategies, and you can say the cipher has a win rate of maybe 70%. Just ignore the phone, guys. The back pattern has around 60%. Trend continuation is only around 55%. Could be more depending on your entry. 2618 is only around a 50%. And so you have all these different strategies that you may or may not know how to trade. What you need to do is trade the strategies that you trade consistently. So if you've only tested trend continuation, you're only going to trade trend continuation. So there is no right or wrong. Okay, there is no right or wrong. For me personally, I would only buy the bat or the cipher pattern up if we get a rotation pattern down here at the X leg. So for me, I don't need to worry about that, but I will trade the trend continuation. So I'm just simply going to be waiting for a first, second or third chance entry, and I will be taking targets down at this level. And when I do, I'm going to be looking for a rotation pattern, and I'm going to be looking at buying the market up to a 38.2 fib of those patterns. Okay, so no right or wrong. That's why the market moves, because it moves based on people's interpretation of the market. And remember, there are other people out there, they trade Bollinger Bands, they use EMAs, they use Elliott wave theory. There are so many different ways to trade. As long as it's consistent for you and as long as it's profitable for you, there is no right or wrong way. Take care, Marcus. So lots and lots there, isn't there, guys? So for me personally, this trade, the trend is valid on the 60, so I'm allowed to drop one time frame lower to the 15, and I'm allowed to then look for that candle. I'm allowed to look for that lower close. So I'm going to set an alert for this for me, and if I get an entry, I'm going to send it out as a signal, guys. Any questions on the pound dollar? Quite a good currency pair this today, because lots and lots of opportunity. Again, whatever's right for you, whatever you've tested, whatever you know to be profitable. It's a good job I didn't go home. The wife would have killed me. I would have taken my germs back. She would have hated me. She would have come. Don't come near me with those germs. I don't want your lurgy, she'll say. So that was the pound dollar, guys. Pound yen. Well done to those of you that took the pound yen. So lovely 35 pips. I'll have to make a note of that. Make sure that I update the system. I've been so busy lately, guys. It's been finding it very difficult. I've not been getting back till 10-11 o'clock at night and being able to update the trade log. So pound yen plus, it was 35 in the yen, wasn't it, guys? Let's just have a look at something else first of all, see if there's anything. We'll come back to that, we'll come back to that, we'll come back to that. If there's anything out there, guys, you want me to take a look at, please let me know. Okay, what I do want to show you was a beauty of an opportunity which I missed. Damn, can't believe I missed it. It was a beauty. It was a classic trend continuation trade using the first chance entry. If anybody got involved in this, because the educational material on this trend continuation strategy is available on the website, and if you've been through the website, this was a classic setup. So first of all, structure level in at the lowest structure level, which is this one, and I've been saying for a long period of time that we've come very close to the structure level just here, and we haven't tested it, so there is room for the market to go lower. Yeah, we'll take a look at the euro pound soon, Khan. Then what we do is we draw out the trend. We get an idea of what the market is doing. Move lower, pull back, move lower, pull back, move lower, pull back. So drawing out the outside return, you can see that structure was held up here, and if we actually, I think we double tested up here. Yeah, we double topped up here. So this was within the last chance entry. So like this, guys. Okay, the problem here is that if I bring the RSI up, we did not go overboard on the RSI, so it was not a valid double top here on the 240, but we came into the last chance area, and that's where we want those double tops and those head and shoulders. Drop down to the 240. Look at that, we've got a breakout there as well. Okay, so here on the 240 we had you guys know the Gartley pattern here, which just tapped my entry for 65 pips. I got involved with a head and shoulders down here on the 15-minute time frame, but what I want to do is drop down to the 60 and draw out the trend. So look at what we did here, guys. Move lower, pull back, move lower, pull back, move lower, pull back. This is the outside return. We do exactly the same thing on every currency pair. This is the outside return, And if we reduce it to the first chance entry, which is just the wicks, then you can see here, guys, we held the first chance entry. So because the trend was valid here on the 60 minutes, we're allowed to drop one time frame lower. And look at that for a beauty of a double top. Okay, it's only valid if we get the RSI confirmation. Overbought here with divergence, classic double top. Targets would be a retest of this lower structure level. Haven't quite come down to yeah, no, we did actually, we hit just here. You came a few pips away. So beautiful trend continuation opportunity using the first chance entry. Absolutely classic. And I missed it. I just had my targets hit for the euro yen, and then I just didn't re-look at the chart. Just didn't re-look at it until I came back to it, and boom. And this would have been an instant sell. It would have been, I think, was it 80 pips or something like that? 70 pips. I missed. I'm dead sick, guys. That would have been a massive kick in the right direction for my drawdown. So we'll take a look again now. We'll go back to the 240 and 60 and get a closer look at this, because I think there's still some bearish movement in this. You know, I don't know how somebody can blow the nose so many times within a short space of time. So did anybody get involved, first of all, in this trade? Classic trend continuation trade. It was beautiful. If you did, just give me a yes, and I'll give you a little song if you want to hear me sing. Let's just delete all this stuff off. What I am noticing here is that we've got this. Okay, guys, we've got this. Now, I'm way too late for the entry, but if we can see a retracement before we hit that 127 fib, I'm still going to be looking for an entry on it. Short took the breakout on the 15. Nice. I do think there's some move to go. There's room to go at least another 20 pips lower here. Just depends what kind of strategy you're trading. So well done. So breakout pattern here. 1, 2, 3, 4, and you did have another opportunity here as well. Quite importantly, guys, if I put a structure level on at the close of this candle right here, we have violated this level of structure. Now, unfortunately, we haven't violated this level, but there's a high probability of coming down to at least the 127 fib here. So if we do get some sort of pullback, I'm going to be looking for an entry here and a chance to short the market. I'm going to drop down to the 60 now. Is there anything here on the 60? We need to readjust this trend line, don't we? So it's on the close of the candles. So here on the 60, if you was taking it, this here was not a valid middle test. So this meant this was the fourth test here. And we're well on our way. Let's drop down to the 15. Okay, down on the 15. Not too much. Not too much. But is Mikkel, is this the trade that you're actually in, this breakout pattern, or are you playing a bigger move here? It says you said you're short the breakout, so I'm assuming it's this. Very nice opportunity indeed, which I missed. But I wouldn't be really looking. Well, if I put this structure level on at the 127, we've got. Well, we got that level. Yeah, we could see a bit of a continuation here. It all depends what happens. Sometimes we can just see a spike to the 127 and then a structure hold. Or we can see a follow through. So I'm going to set an alert for this. Mikkel, where was the post in the chat? I would have been all over this. 7 in the morning this was. I'm up by then, but I've got other things to do and I wasn't able to look at the charts. But yeah, anything like this, guys, you know, the chat is there to post trade ideas in for other traders as well, because like me, this was an opportunity I would have been in, and I missed it. I also missed the trend continuation on the euro yen. So anything like that, guys, just post it in. It doesn't matter if it's right or wrong. If you're unsure, post it in, and it's all trade ideas, and if it's valid, I'll just go ahead and I'll take the trade. Can't always be by the charts, that's the problem. So anything else on the euro yen, guys? Aussie dollar, for those of you that are not in it, it was an overnight order. Well, well done. It's looking pretty damn good, I've got to say. Anybody in the Aussie dollar trade? This is a nice looking flag pattern. You're getting a better reward to risk right now if you are. We'll do this and then we'll take a look at the euro pound, because there isn't too much more to go over. Let's go over to the dailies. So on the dailies, structure level in at our lowest structure point, which is here. And as we zoom in, we spoke about this for a long time. You know that we've got this triple retest here, quadruple retest even. And what we did is we broke above that level, and I said you could look for a retest of this trendline structure, and you could look for a move higher here. So I would wait for extra confirmation. Now you haven't got any. If anything, this is telling you that we're moving bearish, because look at this, a bearish move, a small pullback, and another bearish move. And yesterday we had this lower close candle. Now it does fall in line with this level of structure. So even though we've got the lower close and we've got a 3-point move, you want to be a little bit cautious, because we are at this level of structure. So I wouldn't be playing for any type of big move to the downside here. But on the lower time frame, we can look for just a small move. So that lower close is an indication that we could see a move lower. And right here, guys, we have a swing in the market, directional move. And just type in the chat for me, guys, what have we done here? This is indicative of something that happens before we see a breakout. 1, 2, 3, 4. We're currently on the 5th. What is it we're doing here after we've seen a swing in the market, after we've seen a move lower and a violation of structure? Just type in the chat, guys, what is this? Or what do we usually see from this consolidation? Well, I've just said it now, haven't I? It's consolidation. Not buying pressure. It's simply just sideways movement. So we've got a directional move, and then we've got the market moving sideways. And as we can see here, that's all we're doing is moving sideways. It's an indication that the market has stalled. We're struggling between buyers and sellers. There's a battle going on, and we could see a breakout of one way or the other. Now, we have, as mentioned, we're seeing this move lower, a pullback and a move lower, an indication that we could see the breakout to the downside. So let's go down to the 60. Here on the 60, it looks pretty ugly here on the 60, but on the 15, we have a valid flag pattern. So these breakout patterns, we're looking for a swing in the market, which is this. This right here is the swing in the market, and that will be the top of the pole. And then what we need to do is draw out, based on the closes of the candles, the trend line. How many touches do we need, guys, for this to be valid? I've drawn that out incorrectly. How many touches do we need on the trend line before we can look at getting involved with a breakout pattern? There we go. 4. 1, 2, 3, 4. Second of all, we need a minimum of a 382 fib. Swing high to swing low. Yes, we just tapped the 382, and we want this to come into structure as well. So I'm just going to go back to the 60 because we can see structure clearer. So usually the wicks is where we see flag patterns turn. So I'm going to just highlight the wicks, and as you can see, we held structure. Let's drop down to the 15. Boom, as you can see, structure level held, 4 touches, 382 fib. We've got a directional pole, and here on the 15 there is room to go lower. So this is a valid breakout pattern for me, a valid flag pattern. So from the swing low to the swing high, looking for that 127. And if you're getting involved now, you've got a far better reward to risk than I do. Stops for me, what did I go over here? The ATR's just 4. I actually went 7 pips above the high. So I'm risking on this trade 18 pips for 31. Be beautiful. I'd love it if this won, because I had a 35 pip winner earlier, a 31 pip winner today. That would be great for a lovely 66 pip winner for one day. Give me that every day. I'll be doing very, very well. Any questions on the Aussie dollar, guys? Damn it, I'm nearly out of tissues. Literally a full box in about 3 days. Oh, sorry about that, guys. Thank God you can't catch colds through the phone line, eh? So let me just have a quick scout around. Don't have too much more, I don't think, really to go over. Not that is noteworthy anyway. We'll take a look at the euro pound in just a moment. So just as a reminder, guys, keep an eye on the dollar yen. Potential big move to the downside. If not, look for a retracement for a double top and the 382 targets if you want. Pound dollar, you can see that we're rallying lower and lower and lower. We may not get that pullback that I was hoping for. Pound yen, you saw that we banked the 35 pips there. Aussie dollar, I'm in that. There was nothing on the euro New Zealand. Euro yen, breakout pattern. Watch for a pullback on that one, guys. Nothing on euro Aussie, Aussie dollar CAD, New Zealand yen. New Zealand yen. Okay. I was looking to see if this could be a flag pattern. It very well could. Actually, let's just take a look at this, guys. This might be an opportunity. Let's just do the higher time frame analysis on this. So here on the dailies, this was our lowest structure level just here. You can see, look at that. Okay, guys. Okay, this is how important structure is. Right here, this key level of structure. Look at what we did. We violated it. We pulled back to it and then broke to the downside. Okay, guys, great to see. It's the beauty of structure. If you can read structure and you can implement high probability strategies within structure, you get to see things like this. Fall back on the toilet roll. Yeah, but that's all the way upstairs and I'm down here. What I am noticing here, guys, is we've got tweezer tops. Okay, tweezer tops are basically just two candles which have very long wicks to one side and small bodies at the other side. That is an indication that we could see a move bearishly, and that would fall in line with us just violating this major level of structure, seeing a pullback and coming lower. So we could very well see a move down to the closes of the candles here, guys. Okay, so that's what I'm seeing on the dailies. 240. 240. Not much here. Let's go to the 60. No. Now this isn't going to be a flag for me, guys. What I was looking at was this. We had a move higher, and we were putting in what could be a flag pattern. I'm going to double check this, but 1, 2, 3. I'd be waiting for the 4th test down here. Where's the structure level that it could come into and turn at? Right here. In fact, that structured level could be bigger. If we pull this all the way over, you can see that we've had test, 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 test. So yeah, if we came into this area, guys, even though the higher time frame here is telling us we could be going lower, we could actually see a bullish move here, guys. Let's throw a fib on from our swing high to swing low. Is there room for the market to go higher? Well, our next structure level is this higher level up here. So yes, guys, even though we've got no higher time frame confirmation, and I don't really like the way that this is formed, this could also be a bullish move. There is one other thing I'm looking at here as well. I don't know if you guys have spotted it. What else could we use here to get involved with a bullish move? What about if I do this? I'll give you a bit of a clue. What about if I do this? What is this, guys? Right here. What is it? Type in the chat for me, guys. Let me know what that is. People keep ringing me. I'm in demand. We've got a double bottom down here. Now it's not a double bottom I would ever trade, but you can clearly see that this is a double bottom, and with double bottoms or triple bottoms, what we do is if we break to the upside and physically violate the V point and there is still room to go to the upside, we can wait for a 26.18 trade and swing low to swing high. Say the magic words, abracadabra. Look at where the 61.8 fib comes in, directly on our major level of structure, right at the 26.18 and right where our 4th test is. Beautiful. But no higher time frame confirmation. I am interested in this trade now because we've gone from just what would have been a basic flag pattern to it now also being a double bottom, which has been confirmed. It also being a 26.18, well done Mickle, and we do have room to go to the upside. So you can, couple of things here, 26.18, I'm just aggressive, I just buy. If you want to be a little bit more cautious, you can just wait for a confirmation candle like a green candle. But if you got involved aggressively, this would be your risk. This would be your reward. Mouth-watering reward to risk. Lovely. Gonna make a note of that. No, I'm going to set an alert. Lots of confluence, guys. I love it when a plan comes together. Those of you that are old enough to remember the A-Team. What was the guy's name? It wasn't Murdoch, was it? It wasn't B.A. Baracus. It was the head guy, wasn't it? The leader. What was he called out of the A-Team, guys? It wasn't Face. Hannibal. It was Hannibal, wasn't it? He was the leader. Love it when a plan comes together. Let's take a look at our last currency pair, guys. Euro pound, wasn't it, you guys wanted to look at? Just keeping an eye on this, guys. So just going back to the pound dollar a second, guys. We're seeing a lot of bearish movement on the pound. So my trend continuation trade is out the window, guys. So I'm just going to clean this up a little bit. And what I absolutely love here is look at this directional move. These types of directional moves is where we sometimes get the double bottom. And if we get this, guys, because look at the RSI already, we're already tapping the oversold area. I'm going to be lapping this up and I'm going to be buying it up to that 382 fib. I'm going to be paying close attention to this over the next few hours. Potential reward 96 pips. Ooh, happy days, happy days if we get that entry. So just having a quick scan round. Yep. Okie dokie. Pound New Zealand. Okay, let's go and take a look at the euro pound. I haven't had a trade on the euro pound for so long. It's just been so up and down. There's not been any anything for me on it, but I haven't checked lately. So, Khan, what is it you're looking at? Are you looking bullish? Are you looking bearish? Oh, I think my computer's gone again. Come on. EUR, Great British Pound. Damn it. Aussie Dollar CAD, does that work? Euro, Great British Pound. Let me try reloading the historical data, guys. It might take a minute. See if that fixes it. Can't say it's Euro Pound hourly, upward bullish. Looking long. Looking long. Okay, we'll give this a minute, see if it loads. Just going to take another look at the pound dollar, guys. So the trade is valid on the 60. Just going to make sure that I've drawn out the wicks properly, because that's where I'm going to be looking for the rotation pattern on the 15. This is a Dell computer. It's a really fast computer, actually. It's only about a year old, but doesn't do very well when you've got, say, 13 charts open. Right. So you see that isn't in the right spot. Okay, so from there, so from the close of the candle down to the wicks, and if I drop one time frame lower, that's where I'm allowed to look for the double bottom. So you can see in this instance that price needs to come a little lower before I can look for that rotation pattern. So I'm going to set an alert as a minimum. Price needs to hit here, and then I'll take another look at it. So let's go and see if the euro pound has loaded. No. Let me get rid of that. Okay. File, new charts. Forex. Just going to try a new chart here, guys, see if it works. Euro pound. Load. I'm going to have to shut Ninja Trader down, guys, and restart it. So I won't do that now. I'll have it fixed for next time, but it's obviously not working. So, okay, guys, so I hope you've enjoyed the webinar. Just as a final refresher, watch out for the dollar yen. We've got the continuation opportunity, the pound dollar. I'm going to be looking at buying one of those two patterns up if we get a rotation pattern. The pound yen, we banked 35 pips on. You saw that just as it opened. I'm short the very nice flag on the Aussie dollar. And euro yen, we've got another breakout pattern, a triangle, waiting for a pullback. And I'm waiting for the flag pattern on the New Zealand yen. I didn't make a note of that. Let me just do that as well. New Zealand yen flag. Okay guys, well thank you again for joining me. Hope you've enjoyed the webinar. I have. It's nice to see some decent opportunities, some good winners over the past couple of weeks. We'll be back tomorrow for another, is it Friday tomorrow guys actually? We'll see what, yeah, it's Friday tomorrow. We'll see what the markets are like. If there's quite a bit around, I'll do another YouTube live. If not, I'll do a quick hit video. But apart from that, thank you for joining me, and I will see you in the next webinar.